Good evening. This is the Elliott Wave update for the S&P 500 for Thursday, January 27th, 2022. Interesting market, interesting days of trading. Today was another volatile day and very profitable day. It wasn't as easy to trade as previous days this week, but nonetheless, it was very profitable. The unease came from the very up and down jerk moves that were being created by Apple and in the NASDAQ. And as we get ready for Globex to begin in about 3 minutes, the S&P is now looking like it will open $1 higher from where it closed at 43.44. It's 43.45 bid. But the NASDAQ closed at 14,113 and is now looking like it's going to open at 14,164. So Apple is trading at above 167 at the moment after closing at 159. But over today's high, it's really just $4 above the highest level it reached during today's session. So we'll see. Now, what does that all translate to be for us here in the S&P? Also, we did have very favorable earnings from both Visa and MasterCard today, and that has really put a jump into the Dow. But both of those, plus Apple, sits in both the Dow, the S&P, the NASDAQ, and also the Russell. So heaviest weightings are for Apple sit within the NASDAQ, but it also carries a fairly heavy weighting in the S&P. So as this all filters through, I would expect that we're going to get higher levels tomorrow. So what does that mean with reference to the current Elliott count and the expected moves? So let's just review where we are and how this is all going to fit. Right now, I continue to label the high that we had yesterday at 4,444 as the completion point for the minor wave 4. Now, that would suggest and put us in a minor fifth wave decline. Now, within that minor fifth wave, I have felt that this could be wave 1 of minor 5, this then wave 2 of minor 5, this being wave 1 of 3 of minor 5. And what we're doing right now is wave 2 of 3 of minor 5. Now, if that's the case, wave 2 can actually come all the way back up to 44.14 before turning. It can't exceed the starting point for this first wave, and that's at 44.22. But it certainly can move up. Now, the NASDAQ we're seeing that we've now opened, and we're just hovering around 43.50 and onward. The NASDAQ is just going crazy all in of itself. It opened up above 175. Now it's already trading down to 163, 162, 159. Yeah, there's just a lot of craziness about people having to cover or doing whatever they think they need to do. So what does that all tell us on what we can expect? I think, again, we're going to have to let the market just sort this all out. But if indeed this is 1, 2, 1 of 3, 2 of 3, the next link would be a very strong decline, taking us below 42.13. Now, in lieu of these earnings, one might think, well, how is that going to be possible if these stocks are going to run to the moon? I would agree, but stranger things have happened. So again, I and us need to wait for the market. The market will tell us what the intent is. So I'm now going to lay out 2 different views. One would be that this is a wave 2 or 3, and then what the expectations would be for a 3 of 3. As you all know, and I've said so many times, under Elliott guidelines, the third waves are normally the longest and the strongest. Within that third wave, the 3 of 3 move, because they subdivide, is where we receive a point of recognition. Now, in this case, that point of recognition would be to the downside. So that's where we're going to start to see a lot of acceleration. Now, what would happen if we don't see that? Then it's clear to me that it's not a third wave. So the additional view that I have would be as follows. Here we do have the completion point for that minor third wave. So and this is what I feel was the completion point for the minor fourth. But if this minor fourth wave is still in progress, it can be viewed as follows. This would be A, B, C for the first ABC. Then we get an X wave down to yesterday's Globex low at 42.63. That would be X, and this is A, this is B, and we're now going to work through a C wave, which would be expected to come up and take out the high at 44.22 and likely start to reach up towards the previous high at 44.44 with the 200 moving hourly 200 moving average at 44.48. Now that fits. Then we have a double ABC still within a fourth wave, and quite honestly, not uncommon in a fourth wave position. So the market is really trying to determine what it should do, and it's taking all this information in, and we still have all these earnings reports to come out. We still have Amazon, we still have AMAT, we still have AMD, we still have Facebook, we still have Google, we still have NVIDIA, we still have PayPal. There's a lot of earnings reports still on the way, and some will come tomorrow. No, actually, I don't think any report tomorrow unless they report in the morning, but then we move out to next week. And so like Amazon, AMD, AMAT, Facebook, Google are next week. So with that in mind, this corrective phase, this up and down in a corrective phase is very fitting as the market awaits additional information. Now, my thought pattern is that because it's a 4, I'm still looking for that fifth wave down. So wherever this ends up, I would still be looking for a fifth wave down to break below this third wave, that low at 42.13, and begin to head down to these additional levels. And we still have it all the way down and possibilities of it getting down to 39.15 before all is said and done. And we can put a minor 5 completion point and then put on the next degree up an intermediate wave 1 or A. To be determined, we don't know yet. The market will let us know. So what can we look for tomorrow? Well, continued digesting of Apple's report, Apple's earnings, and how that's going to factor into the market. They're now receiving all of the forward guidance. The press conferences is underway, and I don't know if it's complete yet, but they did not necessarily blow the doors off of their earnings. They were good earnings, and they did exceed expectations. That was both on iPhone sales, that was on Mac sales. And so if they're painting a rosy picture moving forward on that, then they're going to be the hero of the market. But that could be possible. So we need to keep an open mind about what is trading and how we're going to trade it. So again, I am going to rely on the market, the price action, the moving averages, my possible wave counts, what to expect, If this is now a C wave up, remember C waves are like third waves. First of all, it has to be 5 waves up from here, and it's going to accelerate, and it's going to be looking pretty brutal to the upside, not to the downside, to the upside. And that would then finish the second ABC. And hopefully by then there's enough information and the market has enough to know what the direction is really going to be moving forward from there. Now, what I also want to notate is that we also have to keep in mind that it may only get up thus far and turn. So again, what happens overnight, how other markets relate, what we feel or what the US feels and how traders feel coming in tomorrow, they may take the rest of the market down and Apple goes up all by itself. That's also a possibility. So we don't know. So that's why I'm going to give both sides of this coin. If it's a C wave going up, look for it to at least reach 44.14, get above that high at 44.22, start heading up to 44.44. Now, from current levels, that's a 90-point rally. Could the S&P do that in a day? Absolutely, we've seen it. So that's not beyond expectations or what we can expect for tomorrow. But it's going to be very much like what we saw here. It's just they step in, they're buying, and they're not looking back. It just goes. So that's a strong possibility. Now, so that would cover us on the upside. Downside, it's going to turn, it's going to break 45.34, it's going to break 45.19, it's going to break 42.98, it's going to break 42.63. Then it has support at 42.42, and then expectations for this fifth wave, of course, is for it to break 42.13. Now from here, that's an additional 100-point move. Is it possible? Yes, but it's going to have to be accompanied by some pretty serious push, some pretty serious, something that's going to support exodus, selling. And so in lieu of that not happening, we may just kind of flounder in between. If they decide they're not going to take it up, they're going to be on a wait and see, then we're going to be dealing with Friday expiration. That's all going to pan out. And so often we can get a really big move on a Friday expiration, or we can get a sideways move, or it might move up and then it just sits in a range and it sits there and everything expires and then we don't get anything. So that would be the scenario for tomorrow. We've got it all. And we certainly can expect one of the three, obviously, but the up and the downside, and actually the sideways, all carry an equal probability of being what pans out. So trade smart, trade using your moving averages, don't get married to any position, don't get married to the upside or the downside, play and trade what's in front of you. So that's where I'm going to have to leave it right now. It is not clear, but we may still be in that fourth wave. We may be inside of a fifth wave down. And within that fifth wave, we may be within the third wave of 5. And so the next move would be to the downside, and it should be powerful, and acceleration should occur. In lieu of that happening, the market can just continue to zip higher. Okay, so those are the expectations. If that's the move, the expectation is that it will accelerate. If we don't get that acceleration, that ain't going. Then I'm going to be looking for the other side to take over, or we have that sideways action. Okay, so upside should also see some acceleration as it gets itself going. So if we get the acceleration to the upside, then it's likely that C wave up. If we get the acceleration to the downside, then it's likely the third wave of 5 going down. If we just move sideways, We'll figure out what it is, but they're just pausing because they don't have enough information or enough push to go either direction. All right, leaving it right there. Our next update will be on Sunday, the 30th of January.